you arrange your
I
like the.
just my hair is wet, so I'm just showered.
Oh, okay, good.
I'm just gonna
Great
close my
then. So,
door
well,
here.
thank you so much for joining today.
What's that?
Where are you right now? Are you in New York?
So I actually, as part of COVID, moved out of New York City to the New Jersey suburbs, so about 20 minutes outside of New York City.
Oh, perfect, perfect.
How
So,
about
well,
you? Where
thank
are
you.
you at?
I'm in Santiago, Chile right now. We're still in the same area.
Nice.
Yeah, so thank you so much for joining today. We're like now live, so people are actually hearing us in this like updated chat between both of us.
Okay, great.
Yep, so that's very good. So well, thank you so much, buddy, for joining today. It's a honor also to have you as well, and thank you so much for supporting all our endeavors with related to like connecting entrepreneurs with investors from all over the world. So I'll do a brief introduction, and then we can open up the conversation if it's okay for you.
Perfect.
Yep. So well, thank you everyone who is joining today. We're on YouTube Live. So very excited about having Slava today. You're the founder and also managing partner of Humbition, right? That's how you pronounce the fund.
Exactly.
Yeah, it's an early stage operator venture fund built for by founders for founders. So that's an interesting approach because you also co-founded like different companies throughout your life, and also ran as CEO of one of the, if it's not the, but it's one of the largest uh, like platforms for crowdfunding and launching actually a lot of different products called Indiegogo. So you founded that maybe 10 years ago, more or less, I believe.
Yeah, 2008. We launched in 2008.
Oh, so a long time actually. So
It
you
is
have
long.
been like for like almost all your life, and now that you are like in the other part of the chair, it's an interesting approach and would be amazing to have this conversation with you. For everyone that is hearing, please text us your questions to Slava, and we will be uh, trying to get the answers as soon as possible. So Slava, I don't know if you want to do like a brief introduction as well of yourself, and then we'll start this like Q&A.
Sure. Yeah. So thanks for having me. Always happy to help. My goal here is just to give a quick background on kind of my experiences, and really for you to be able to then ask any questions you have. And really best for the questions to come up, because if you have a question, probably another 5 people on this video chat have a similar question. So everybody should start thinking about the questions they have. Question, Matthias, how many people are on this?
I'm not seeing the live, so but it should be like maybe 20, 30 people. And we have people from like Europe, Africa, and Latin America connecting. So but we had like maybe 100 people register more or less.
Gotcha.
So yeah, people just arrive maybe late, but it just depends on the time zone. So it's not
No, I
only
understand.
Latin.
I mean, the only reason I ask is sometimes I like to know what each person is kind of working on, but it's probably hard to do that in this format, right?
Yeah.
Okay. So yeah, I was born in Belarus back in 1978. Came over to the United States when I was 6 months old. Then, after college, after university, I started as a strategy consultant for 8 years, helping big companies try to think about the future. And while I was doing that, is when I then worked with my two co-founders to create Indiegogo. So we came up with the idea in 2006. We launched in 2008. The market crashed in 2008, and it was a very bad economy. So it was very difficult to navigate through that. For 3 years, we got rejected by 93 VCs. It wasn't until 2010 that we were able to raise some money. It was the 94th person that finally said yes, which was very difficult to navigate. And then after that, really things started to grow very rapidly. We then raised a $15 million round about a year and a half after that. And then we raised a $52 million round about another year and a half after that. And we've raised from some incredible VCs, but also incredible operators like Max Levchin, who's about to go public with a firm, or the Partovi brothers, Keith Raboy, Ben Ling, Maynard Webb, who built eBay, and having the Richard Branson. Having those operator investors was really just so helpful. 20 minutes with them would be able to save sometimes 3 or 6 months, which would be incredible. I started angel investing about 8 years ago. I've had some pretty good results, including being very early into GOAT, the sneaker marketplace that is doing really well. And I connected with my friend Cyrus, who built ZocDoc. We both went to Penn, and we were both in New York, and we both really appreciated operator investors. So we decided to create a fund really focused on operators and founders. So we started that 3 years ago and raised a $30 million fund, 30, and we've been investing into early stage, seed, and A. We like to write $250,000 checks for seed and $1 million checks into A, and everything in between. We can lead. We really like to follow. We love marketplaces. We love health tech, and we love frontier tech. Frontier tech to us is cutting edge technology companies, usually driven by AI. And we have been focused on investing in the United States, so specifically in New York whenever possible, but generally in America. But obviously, I know all of you are outside, but always happy to be helpful to build the ecosystem across the world.
Awesome. Well, actually, a lot of things you have been like connected and working on. So very interesting how you pass from like the startup, or actually corporate side, then startup life, and then or founder life, and then also the C life. And there's the question that maybe we can start talking from the early days is, what were the biggest lessons or skills you learned working for large corporations that translated to your entrepreneurial endeavors?
I mean, it's really important to, well, first of all, I was able to work with huge Fortune 500 companies like FedEx or Goldman Sachs or massive telecom companies. This is back in the early, from 2000 to 2008. And you're really able to see what kind of rigor needs to go into decision making, where you can't just like, throw around $100 million. You need to be thoughtful about what you're doing with it, and you need to make sure that it has enough results that you can make enough return versus your other options. So when we're startup founders, we're like, hey, I hope anything works. But when you already have a big company, you really need to make sure that when you spend the dollar, it's getting the best return possible. So if a dollar can get you $1.10 back, but a different dollar investment can get you $2 back, it's better to do the $2 opportunity. And that sort of decision making and filtering and navigating that was really important. It was also great to see the financial rigor in terms of the analytics and all the data and analysis that went into the decision making. And obviously, when you have bigger companies, there's more people that you need to get to agree to things. So you can't just do it just by yourself because you feel like it. You really need to have various parts of the organization buy in. You need to get approvals. And you need to learn how to manage and communicate well. So that's the sort of thing that if it's a brand new startup or a small company, you don't always have to navigate. But with a large organization, those are great lessons to learn. And I think that was very helpful for when I built Indiegogo.
Perfect. So, well, there's another question actually. And what emerging markets are you most interested on? Like, I know that you mentioned that you were like more tackling the US market, but if you had any type of interest in emerging markets, which ones are the ones that you're picking or actually just looking at?
Yeah, I mean, I would say that, again, from a venture fund perspective, our LPs have invested in us, and we're investing on a thesis specifically in the United States. That said, personally, I think that there are tons of opportunities across the world. And it's really about having the network and the knowledge of how that local area is working. I personally don't have intimate knowledge across many places, but if I was just going to think about some that seem interesting to me, is Definitely, Israel is interesting to me. I think that's a dynamic market where a small country, but a lot of good, interesting tech. You're really seeing that in Asia, whether it's India, China. You're really seeing some rapid adoption of technology. But I also think that whether it's South America or Africa, you're really starting to see a significant growth rate there because you're starting on a smaller base of adoption. So I think there's a lot of excitement in those markets as well.
Yeah, that's interesting as well, because primarily what we want to do here with global pitches, we're going to connect startups that are solving one or more of the SDGs with VCs from different parts of the world that are actually open to invest and support those companies scale. So I think that there's a lot of interest, but it's just focused in startups from Latin America and Africa. Why we're doing it is because we see that a lot of the solutions from one area, it could be implemented in the other one as well, and backwards. So based on that, those are like two huge markets, and maybe that's something that we can also talk a little bit. But I'm just seeing like YouTube now, we're having like a lot of questions. So at the very early stage, how did you get people to see the vision of Indiegogo, like having more than 93 was right to get the first investor? Like how was that process, and how did you actually work that out?
Yeah, it was really hard. Like I said, we got rejected by 93 VCs in a row. So I obviously wasn't very good at getting them to see the vision early. Really, what started happening is my two co-founders and I, Danae, Eric, and I, really started having to become sustainable ourselves. So we just thought we weren't going to be able to really have any more money. We were bootstrapping the business ourselves with our own money. And we just figured if we're not going to get external capital to come in, the only way that we could keep on spending money is either our own money, which we were running out of, or we need to create some revenue to offset the expenses. And the expenses were low because we weren't even paying ourselves salaries in the beginning. So eventually the revenue started to go up. We really started to see growth in the marketplace, which then turned into growth in revenue. And it started offsetting the expenses. And before you knew it, we had one of those charts where it was up and to the right, exactly what VCs like to see. We had the continuous month-over-month growth, quarter after quarter growth, and then year after year growth. And eventually, the 94th investor just couldn't really argue with me about their opinions because I wasn't telling them my vision. I was showing them the facts. And the facts were showing that the model was working. And that's how I was able to finally get them to see the vision, which, again, I don't think that was great in terms of me being able to prove the vision. It really required the facts. And sometimes that's important just to show the momentum of the traction. What a lot of people like to say is, Jeff Bezos, I think, has a saying, which is, show me the facts and the data, because if we're going to use an opinion, I like mine the best. So it's really important sometimes to just show the momentum and the traction.
Yeah, so that could be like your main takeaway, actually, right? It's like trying to keep the humble and just trying to find the right metric that VCs would be open to, or would be more aligned in order to invest within your company. Because there's another question from Gonzalo here that is like, can you name some takeaways of those experiences to keep in mind for people that are in the same position today? So I think one is like just keep pushing and getting the right metrics growing, and at some point the data will just get the word out and get some VCs excited. But are there any other type of takeaways that you might be able to provide us?
Yeah, I would not have the focus being trying to raise money, but rather focus on how to have happy customers. And that includes creating the product to be as good as possible in terms of the features that you're trying to create. And when I say good, I mean simple also. You want to keep the experience in the beginning as simple as possible and think about what is the metric, just one metric that you're trying to improve every day or every week. And then evaluate yourself as a company and as a product. Like, am I doing a good job? Because is my metric growing? And are my customers happy? If those two things are going well, that's really going to help you to try to raise money from the VCs, because you don't have to, prove to the VCs what they should want. You could show them happy customers and the metric that you're trying to grow, and that should be aligned. So I think one of the key takeaways is, really focus on your customers, really focus on your own product. Look to measure yourself so that you can be honest with yourself about, are things going well or are they going poorly? So it's not subjective. You can really have objective data. And then in terms of the fundraise, don't make that the end goal. Make that just a result of good work with your customers.
Perfect. And there's a question that I believe it would resonate a lot with the audience that Felipe did, but he basically did it based on Chile, but I will try to do it more abroad, like emerging markets. So in those emerging markets that I mentioned, like venture capital industry is not very developed. Like, what would be your main like opinion in terms of a company, instead of doing like product market fit within their country, trying to scale rapidly to a global market?
It all depends on the business. But I think typically it's best to keep the focus as narrow as possible, because that way it can become deeper, as opposed to wide and shallow. You want your pool of traction to be very narrow and very deep. Like, that area and you have those customers very well. So it's okay, if you're based in Chile, to try to build a business in Luxembourg or China, but I think it's just as harder, because you don't have the local knowledge. You might have regulatory issues. You might have language issues. You might have time zone issues. That's not to say that's not allowed. But usually it's best to be local, because you know your area best, the recruiting best, you can have the connections best to the customers. But I just wouldn't do a lot of different things at the same time in the beginning. I would focus on one thing.
Yeah, perfect. Yeah, my thought in this is, a lot of the Israel companies, what they have been doing is trying to build like the product market fit within their market, and then just scale fast to where is the real like big global market, and scale from there. So maybe that could be an interesting approach, is try to get deep in knowledge in terms of the problem that you're solving, and then go directly and as fast as possible within the market. Now there's an issue with that, right? At the end, is if you don't have like a VC kind of like a industry able to support you, at least to get from the seed stage to Series A, or just scale a little bit, then you might be not able to grow and land within those markets. So in terms of how to develop a VC industry, my thought is always aim for like a lot of small hits, or aim for one large unicorn. It's like, in terms of your thought, is a unicorn could actually get like a lot of VCs investing, or not VCs, family offices investing and building a lot of funds? Or you think it would be much more likely if you have like small but continuous hits within the market? It's like selling companies for $5 to $15 million, maybe 50 a year, or getting just one unicorn being acquired could become like, or make the game changer.
I think that there's no exactly right model. Everybody is trying to figure out how to create the best returns for their LPs, and also based on the capabilities and experiences that they have. Some funds, they do many checks, and many smaller checks, and it's much more a broad distribution, and they're trying to get as many opportunities to get big results as possible. And other funds have much more concentrated, higher portion of their fund as a single check, and more concentrated portfolios. I really think it all depends on what works for the VCs and what the LPs are interested in. At Humbition, we're more focused. So we've made 15 investments so far, and we really try to lean in and help as much as possible with our portfolio companies. If we had already invested into, for example, 50 companies, there's no way that we could be helpful to all of those companies all the time. And for us, we really are looking at companies that have the potential to be able to become unicorns. That doesn't mean they have to become unicorns, but we want to be able to see that potential when we invest.
Perfect. So another thought, you mentioned that you invested already in 15 companies. What do you look for in those entrepreneurs? I assume that they're like seed stage, right? Very early.
They're not all very early. They're seed and A, and I like to call it serious seed, which means that they usually have $250,000 of run rate revenue before we invest. But sometimes we invest very early, but in those situations, it's both either a repeat founder who's had a good result previously, or somebody we've known for years, and often it's both. So we're usually not coming in super early.
Okay, perfect. And in those terms, what are you looking for a company in order to receive a check from Humbition in this case? It's well, I understand that it's in the fintech world, right? But what are the key things that you actually want to review in a slide deck, like in order to give at least some thoughts of what is the minimum things required for an entrepreneur to have in order to present their company to you?
Yeah, for us, it's not just fintech. I mean, we're a generalist fund, but we really love marketplaces. We love health tech, and we love AI-driven companies. But in terms of what we look for, it's the team. We want to understand what's the traction, and we want to understand, what's the ecosystem of the entire landscape. Who are the competitors? Who are the collaborators? How will this industry grow? A lot of our time is spent on team, and a lot of our time is spent understanding, what is the early signals of product market fit in terms of how the entrepreneurs have learned from their customers, how they've evolved their product, and what are they building that's able to scale.
Perfect. So yeah, it's
but a very simple metric. A very simple metric is if they have $250,000 of run rate revenue, so over $20,000 of revenue a month, that's where we start getting interested. Before that, it's probably early.
And the approach on let's talk about a little bit about the fundraising, like how it is. Normally it could be like a cold email, right, or a warm introduction. I assume that you prefer obviously the warm introductions, but understanding that maybe an entrepreneur is not ready to raise yet, would be a good idea to start showing their company early to you in order to prove or demonstrate that they have traction and potential growth for I don't know, like next 6 months or something like that in order to fundraise.
So to be clear, in our 15 investments, none of them have come cold. All of them have come through introductions through our network, or we know the entrepreneur directly. As a matter of fact, on our website, there's not a lot of information because we're really not looking to solicit just cold emails usually. That's not to say that we don't get cold emails. I mean, I read everything, but it's usually not where we're finding the best opportunities for investments. I think there's 4 ways to get to an investor. My recommendation is not to connect with an investor until you're ready to start talking about your fundraise, because otherwise, they get to keep track of you, and you told them that you were going to grow revenue from 10 to 100, and then you come back and then they say, did you reach 100? And you say, no, I reached 50. And you're really excited because you went from 10 to 50, but you didn't do what you told them you were going to do, which was 100. So then it looks bad. So my suggestion is you follow up with investors when you're ready to raise. The hierarchy of the best way to get connected to an investor is, first of all, pick the funds that you want to talk to and identify the partner at the fund that you want to be connected to. Once you've done that, you should identify, number 1 would be a CEO, a portfolio CEO from that partner. If you can get an intro from a portfolio CEO of that partner, that's the best. Number 2 would be getting an intro from an operator that the venture fund knows. They might not have invested in that operator, and it might not be their investment, but they know that person and they trust that person. That'd be number 2. The third best introduction would be from an investor that has invested in your company, and they're introducing you to a different investor. And the fourth, which is the worst, is asking an investor for intros to other investors when they haven't invested in your company. That goes very poorly. And I even tell people all the time, I pass on their investment and I say, hey, we're not, this isn't a right fit. We'll need to look at this again in a few months or in your next round. And they say, thank you so much. You've been really helpful. Can you think about a couple of funds that might be interested that you can make an introduction to? And I always tell them that's a really bad idea. I tell them that maybe, here's a fund like a fund A or fund B that you might want to talk to, but you never want me to make that introduction because I just passed on your investment. You want to figure out how to get to them through your own connections.
Yeah, that's an interesting approach, actually, because if you introduce someone that you wouldn't invest, one, it just burns you in credibility. And second is, why would you be introducing the company if you passed? It could be maybe if you're not in that vertical or something like that, but I assume that
that's true. It could be. That's true.
It would resonate.
Yeah, it could be that it's a different vertical, or maybe it's the wrong stage. Like, maybe it's much earlier or too late because they're looking for a C round and I'm doing seeds, and I'm like, hey, you might be interested in this. That's definitely possible. That's better scenario for sure. But I still would try to get connected through either a portfolio CEO or an operator that they're connected to.
Yeah, maybe that could be an angle if you're not able to connect with them. But
Exactly.
But yeah, in terms of hierarchy, it should be a founder CEO that the company actually invests. Hopefully that they had like an acquisition or IPO or something, right? It's like a liquidity event that the entrepreneur actually made. Maybe I assume it's going to be like the highest.
It doesn't even have to be that. It doesn't even have to be that. If they've invested in the operator, in the CEO, then that's enough. Obviously, if it's a CEO who made them a ton of money, even better. But sometimes that's really hard to get that connection. But it's, that's not required.
Yeah, perfect. So, well, it's the founder, then it was an operator, then
Exactly.
Investor from your company, and hopefully not to do it, investor that is not investing in your company.
Right.
Perfect. So now we have a question from Tunisia, actually, from Donia. It's based on Indiegogo, right? We will just have to change a little bit the topic, but it's interesting as well. How would a company like Indiegogo innovate and create new business models? It's an interesting one. I know that you're not working at Indiegogo right now, but maybe like an approach as an early founder.
Yeah, sure. I mean, I still very much am involved with Indiegogo. I'm on the board. I put in a CEO a little while back. Still care very much, and it's exciting. The company's profitable. We're continuing to grow. COVID has actually seen some significant tailwinds. I mean, any company, once they've created connection with the customers, there's ways to evolve and to provide more services that the customers want. What's interesting about the Indiegogo business, it's a marketplace, so you have both the backers and the campaigns. So there's a lot of opportunities to create more services to the backers or more services to the campaigns. For example, we just launched, we've done for a few years our fast track program in China, where we provided additional services to Chinese entrepreneurs. And now we just launched that in Japan as well. And it just shows that there's ways to continue to add services and create more monetization beyond the base model.
Perfect. And then there's another question here from Luis. He's asking, based like getting back to the team, what kind of characteristics and well, you're able to see it right in the screen. What kind of characteristics and abilities, tech, sales, or other, or even drivers are more relevant if you're in an early stage startup team?
Yeah, I like to see the mix. Usually I like to, unless people have had nice results from their previous company, I like to see multiple co-founders, at least two. And usually the simple makeup is there's one person who's much more commercial and much more into sales and marketing. And there's usually one person who's much more technical in terms of product and engineering. If there's a third person, it'd be great to have an operational focused type person, but it's really about having a complementary team. There are founding teams that have no technology on their teams. That's not my personal preference. I like it when there is technology knowledge on the founding team. Usually when you use a agency or some outsourced technology, it's very short-lived in terms of how well and how nimble the product could be growing. So, I really look for multiple co-founders, usually one commercial person, one technology person, and beyond that is just what are the complementary skills for that industry.
Perfect. And based, like, I have seen like a lot of family offices or this type of corporate venture capitalists that they have also built some companies out of it. And what I've seen is that they give like a smaller stock option to the CEO, for example, CTO, or maybe part of the team, because they're paying like a very nice salary, right? And what are your thoughts in terms of those type of companies that it's like all the stock is based on early investors, and the founders have like maybe maximum 20% of the company? And what do I mean founders is the people that are actually running the company on a day-to-day versus the like kind of like the board members. Do you think it's a good approach, or trying to make this group of people learn more, it might be well to try to reduce their participation within those companies, giving much more equity to the founders who are running everything?
My opinion is the people that are running the company, the CEO, the CTO, the COO, the people who are actually running the company day to day should be the people who have the most equity. And if that equity is not in their hands, the incentives are not aligned appropriately, and you're going to have a difficult time scaling the business to be a significant company in the long run.
Yeah. Yeah, so in that case, it's trying to align the incentives and maybe find a way to get like a success back to the backers that actually like started with the idea, but normally because they have like a lot of different businesses, they're more like business owners instead of just the entrepreneur running everything. So trying to find like a balance between of those could be a good approach. Here we have another question is, does this program Global Pitch, it could help me to get to you or other VCs, not in a cold way? So do you think this type of competitions would support as well if they're like in your specific vertical and areas of interest in terms of investment?
I mean, getting an intro from Matthias is definitely helpful. I know Matthias, and it's always great to have his connection in terms of as it relates to our fund. Again, we're not investing for outside of the US, but definitely, if you have people that that know the venture capitalists, then that's great.
Yep, perfect. So at least this will actually help. And thank you for saying that an intro from me would be hopefully not as cold as the VC turning out, right?
Exactly.
But well, thank you for that. And now, like, I don't know if there's more questions, right? But if not, then I can also jump a little bit extra. And in terms of like, there's a specific question that I receive a lot from different founders. That is, how can I show that this is a big market? And yesterday we had a conversation as well, same as this one, with Jeff Hoffman, and his answer was, if you need to like prove that the market is big enough, then it's not a big market, right? But at the end, like a lot of VCs, and I believe that most like non very Navy type of VCs, right? Like early funds and everything. They focused a lot in terms of showing like the $1 billion market and how you're gonna get like 5-10% of it. And I believe that it's a right approach in terms of understanding where you can actually scale, right? But in the early days, I assume that all of that doesn't make sense. Is just try to prove like the traction that you're having and it's growing. So what is your thoughts in terms of that? It's a specific slide that you obviously want to see, or it's more in the conversation that you're having with the entrepreneur, the details that you can get are much more valuable instead of that specific slide saying like a $100 billion market.
I would like to know how they think about the market. So yes, that slide is important to me, not because of exactly what the number is or not, but it expresses how they've analyzed the market and who they think is the right opportunity for them to go after in the coming years. So that's really a discussion. And then what's more important to me is how you're proving that your product is already serving that market well early. Um, so, you've shown that you could do this 500 times or 5,000 times, but there's 50 million opportunities to do it. So how you explain that there's 50 million opportunities, that's great. But more important to me is showing that I've already done this 5,000 times. So I just need to figure out how to do it, many more times.
Perfect. And based, for instance, in terms of strategy on building the company, and now I'm putting your hat as an entrepreneur, right? What I've seen that works a lot, and it's based on what you also mentioned before right now, it's kind of like the copycats, kind of like model. It's like bringing this proven solution that it's in a global market and just test it in your emerging market and scale from there. And we have seen a few companies that actually like succeeded a lot. You have like Chilean ones that they sold their companies to Groupon. Same team built like the Instacart for Latin America. It's Corner Shop sold to Uber and so forth. So there's like you can see like a trend moving, and you even have like eBay and Mercado Libre in long time ago, right? So would you recommend that approach instead for like the first time founders trying to find something that already it's a proven market in a proven business model and try to replicate it where you are, instead of just trying to build something like 0 to 1 or 1 to whatever kind of like approach?
It's hard to say A or B. I think you would just need to evaluate the situation and what your options are. But definitely the idea of taking proven models, working in another industry or in another region and trying to bring it to your market makes a lot of sense. That said, sometimes things don't translate so easily from one industry or from one region to another. So you have to think about what are the hurdles. I also think that sometimes there are very specific, unique offerings that might be tailored to a specific region or that the market in the world hasn't seen yet. So I think you really just need to evaluate your options. It's hard to say that as an abstract answer.
Yeah, totally. And based on what's happening right now, based on COVID, what are the key trends that you're seeing that are like exploding? Obviously, like home office and like kind of like the ed tech, right? But what are the other things that are that you're like envisioning that are not in like the public media, that you are seeing that as a potential future gap? Like I'm thinking of your investment maybe in 3-5 years that you're like now reviewing and just taking like a look on it, saying like, okay, there's something that might explode. Like my thought is based on, for instance, this Netflix document of social networks. I don't remember the name. Maybe that will actually explode in the near future, based on people like selling, for example, their data instead of being the product from companies in the social network, for example. Like, what kind of trends you're like looking at that maybe in 3-5 years you're expecting to have like a massive like explosion based on what happened with COVID? Social dilemma, they're saying. Thank you.
Yeah, I would say that COVID didn't create that many brand new things. What it did was significantly accelerate trends that we were starting to see before. And I think those are the ones that are going to benefit the most in the next 3 to 5 years. That includes things like adoption of gaming, or moving online for education, or figuring out how to do more work remotely, or collaborative teamwork, whether it's across the city or across the country or across the world. I think things like mental health and telehealth are going to continue to grow. I think you're seeing that the adoption for the internet and digital for commerce and is skyrocketing. Having to be able to communicate with people and your customers outside of a store or the physical means is critical. And obviously, everything related to personalizing, last mile delivery, and getting the experience, whether it's groceries or a couch or whatever it is, to make it the supply chain and the logistics as simple as possible. I think that you're going to see significant expansion in this, whether it's in logistics and warehousing and trying to figure out how to bring the cost down for all of that global supply chain. But I think you're really seeing just an acceleration of the trends that were already happening, like cord cutting and removing cable and going on to digital was already happening significantly. Disney was already growing before COVID, and now Disney Plus was growing before COVID, and now Disney Plus is on fire. So again, it's the things that are probably going to be somewhat new is really the focus on personal health, the focus on how to spread germs and diseases. What kind of diagnostics and tests are going to be out there in our day-to-day lives or in our home, in terms of how do we evaluate things. I also think that people are much more sensitive about air quality. So things related to air quality, I think, will be lasting for a while. So yeah, those are just some examples.
Great. Yeah, it's interesting. The one that I've been reviewing, but maybe for the past 7, 8 years, it's the esports, and I've seen it exploding.
Gaming for
but
sure.
And then the esports, I assume that at least in other parts of the world, it's going to be like maybe in the next three years, a huge thing. It's like now it's the amount of people just seeing others, like the professional players, like playing. It's a incredible and massive thing. So there's some room there as well. So, well, maybe the last question, and we can wrap up. There's something that you mentioned also about humbition that it's interesting. Is let me just find the exact word so I don't mess it up. So give me just 1 second here. It's based on what is humbition. It's an early stage operator venture fund built by founders for founders. What does that mean? By founders for founders. What type of support you provide, and why should a startup or entrepreneur would pick you as an investor instead of like others when they're doing like why I would want to work with Slava and their team?
Yeah, I mean, these days there's a lot of money out there to try to get as investment, and there's not that many people that have actually started companies from scratch and have built that to hundreds of millions of dollars of enterprise value, and having those folks available as early stage investors. They definitely exist, and I mentioned to you some of those people who got to invest into Indiegogo as operators, so that we tried to use as examples. But Maynard Webb, perfect example. He built eBay. Now he has his own fund. He's just like such a valuable operator to help get to learn from. And there's just not that many, and especially in New York or across the world. And that was our differentiation, which is if we invest in you, we're going to be as helpful to you as we can be. We're happy to work with you for 4 weeks straight on thinking about your sales model or your marketing or your PR or how to build your product. Or we're also happy to not bother you for 3 straight months because all you want to do is keep your head down and work. So there's not that many folks who have that experience and are writing checks from a fund. And that's what we bring as a differentiation. And just an example, like our experience is still fresh. Both Cyrus and I are still involved with our own companies, new companies. So I actually just launched a new company, believe it or not, last week called Vincent, with Vincent.com, which is an aggregator for alternative investments. And I built a team, and we're looking to create a new marketplace for alternative investments. That sort of fresh understanding of how, you know, the product and the markets are working while having all the experience from before is what we bring to the table with our portfolios. We try to win the award for, you know, best investor. Often there's a lot of investors that the best thing they do is not completely mess up your companies, and we're just trying to be as helpful as possible.
Awesome. It's a very straightforward, actually, value proposition is we can help you get your company running, scaling, and bringing all that like valuable experience that you already guys have. That it's very different than in other parts of the world. And normally it's from someone from like the private equity kind of like standpoint that just started building a fund, and they're more like number focused, and for the early stage, I believe numbers are very relevant, right? But at the end, you need more hands in order to scale things and get it into those kind of like levels. So it's an amazing value proposition, and I'm very honored and glad that we were able to talk today. So thank you so much for having this Q&A session, and thank you everyone for that join us today and ask us, like, send us a lot of questions. We have people from different parts of the world, so that's very cool. And I really appreciate your time, Slava, and hopefully we can see each other very soon. And if not, stay safe and have fun. That's the most important thing.
Okay. Stay safe, everybody. Happy holidays. Have a good end of year. Thank you.
Yep. Thank
Bye.
you, everyone. Happy holidays. Bye-bye.